Here are the crypto top headlines covered in this video. SEC can proceed with Coinbase lawsuit, says court ruling. Next, SingularityNet, Fetch.AI, Ocean Protocol reportedly discuss token merger. Also, Fidelity Files S-1 Application with US SEC for Spot ETH ETF with staking. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which will be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, SEC can proceed with Coinbase lawsuit, says court ruling. Coinbase's motion to drop the SEC's case against the exchange was denied in court, allowing the regulator to proceed with its lawsuit. A United States court has denied Coinbase's motion to dismiss the United States Securities and Exchange Commission's case against the exchange. The decision made by U.S. District Judge Catherine Falla allows the SEC to pursue its lawsuit against Coinbase. The SEC alleges that the exchange operates as an unregistered exchange, broker, and clearing agency, according to March 27th court documents, which state, the court finds the SEC has sufficiently pleaded that Coinbase operates as an exchange, as a broker, and as a clearing agency under the federal securities laws, and through its staking program, engages in the unregistered offer and sale of securities. The SEC sued Coinbase in June 2023, saying the crypto exchange violated federal securities laws by listing 13 tokens it alleged were securities. The firm was seeking an order to drop the case, questioning the SEC's authority over crypto exchanges. Coinbase argued that the transactions facilitated on its platform do not qualify as financial securities and thus fall outside the SEC's purview. However, the regulator argues that at least some of those transactions constitute investment contracts. At least some of the transactions on Coinbase's platform and through related services constitute investment contracts, which the federal securities laws have long recognized as securities. The parties readily acknowledge that the viability of enforcement action hinges on this difference of opinion. The court denied Coinbase's motion to dismiss the case, arguing that similar transactions have previously been considered securities transactions. As explained herein, the crypto nomenclature may be of recent vintage, but the challenged transactions fall comfortably within the framework that courts have used to identify securities for nearly 80 years. The court also cited Coinbase's lack of registration with the securities regulator. The court concludes that because the well-pleaded allegations of the complaint plausibly support the SEC's claim that Coinbase operated as an unregistered intermediary of securities, defendant's motion must be denied. The two parties were ordered to submit a proposed case management plan by April 19th, according to the court documents. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, SingularityNet, Fetch.AI, Ocean Protocol reportedly discuss token merger. The new token would have a fully diluted valuation of $7.5 billion, and a potential deal could be announced as soon as Wednesday. Three prominent artificial intelligence or AI protocols, SingularityNet, Fetch.AI, and Ocean Protocol, are in discussions to merge their tokens into an alt signals or ASI token that would have a fully diluted valuation of $7.5 billion. The deal could be announced as soon as Wednesday, depending on community approval, according to people familiar with the matter, Bloomberg M&A reported. While the three platforms would continue to operate as separate entities, the new deal would foster their collaboration under a newly formed superintelligence collective run by Ben Goertzel, the founder and CEO of SingularityNet. Humayun Sheikh, the CEO of Fetch.AI, would be the chairman of the new entity, according to the sources. Cointelegraph has approached SingularityNet, Fetch.AI, and Ocean Protocol for comment. The three protocols are united by the common goal of developing blockchain-based decentralized AI protocols, which can't be controlled by centralized parties or large stakeholders. The Fetch.AI, or FET, token currently sits at a $2.72 billion market capitalization as the largest of the three coins. SingularityNet's, or AVAX, token has a $1.7 billion market cap, and Ocean Protocols, or Ocean, token sits at a $927 million market capitalization, according to CoinMarketCap data. The potential merger comes during a period of increased interest in AI protocols, a week after reports of the Saudi Arabian government mulling the creation of a $40 billion investment fund to pour money into AI development in a partnership with Silicon Valley venture capital firm Andreessen Horowitz, or A16Z. The fund could take place in the second half of 2024. If approved, this would make the Saudi Arabian government the largest investor in the AI space. In comparison, Microsoft pumped $13 billion into ChatGPT, creator OpenAI, over several investments. In Europe, Google accepted a €250 million fine on March 20th after the French Competition Authority fined the company for breaching European Union copyright laws during the training of its AI model. Our next top headline: Fidelity Files S-1 Application with U.S. SEC for Spot ETH ETF with staking. Staking rewards could create a taxable event for shareholders and introduce new risks associated with the fund. Fidelity filed an S-1 application with United States Securities and Exchange Commission on March 27th to create a spot Ether exchange-traded fund. As expected from an earlier filing, the ETF will give Fidelity the option to stake part of the ETH it holds. The asset management giant's ETF would trade on the CBOE BZX exchange. Fidelity Digital Asset Services, which affiliated with sponsor FD Funds Management, would serve as custodian of the Trust ETH. According to the S-1, the Trust Fund intends to establish a program to stake a portion of the Trust assets through one or more staking infrastructure providers. That decision entails additional risk, the application noted. There would be a risk of loss, including in the form of slashing penalties and liquidity risks while the stake is being processed. In addition, staking rewards would be treated as income for the fund for tax purposes, as a result of which investors will experience a taxable event without an associated distribution from the trust. The application does not specify the expected fees for the ETF. In case of a fork, the custodian will decide which chain the fund will support. There are multiple other risks associated with the ETF. The form points out that regulatory measures in the United States and elsewhere could negatively impact the fund. Among the potential causes of the termination of the trust, it lists regulatory action such as the SEC determining the fund to be an investment company under the 1940 Act, the U.S. Commodity Futures Trading Commission determining the fund to be a commodity pool under the Commodity Exchange Act, and the determination that the fund is a money service business under the rules of the U.S. Treasury Department's Financial Crimes Enforcement Network. The SEC is reportedly investigating the Ethereum Foundation, which analysts say could impact the chances of Spot ETH ETF approval. There has also been political opposition to Spot ETH ETFs. The Ethereum blockchain is also liable to a 51% attack, where a bad actor could take over the governance of the network through a majority vote. The top 3 largest staking pools controlled nearly 50% of the Ether staked on the Ethereum network, according to the forum. Lido DAO is the largest ETH staking pool with 31.5% of all staked ETH. Analysts have said that the introduction of a Spot ETH ETF could reduce the influence of DAOs, but create new concentration risk, depending on how ETFs choose to distribute their ETH among stakers. The SEC has pushed back the approval deadline for other ETH ETFs to May 23rd. There are 8 applicants for Spot ETH ETFs awaiting an SEC decision. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.